Hey, what's up guys? Nehemiah Douglas here, and I'm the owner of Vision Trading Network. 1,100 students, or more than 1,100 students worldwide, featured in Forbes, Yahoo Finance, blah, 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 blah. And I'm here to teach you guys a little bit about what Forex is. I get the question all the time. You know, people see our posts and things of that sort. They hear about my students doing what they're doing in the markets. They see my results in the market. So people are always like, why and how are you making so much money? Because I've never heard of this. I have no idea how it works. And sometimes, you know, people even Google it and then they find certain things like babypips.com, and they still don't get like a firm explanation on how and why me and my team make money each and every week in this market. So what I wanted to do for the next few minutes, maybe 15-20 minutes or so, is I wanted to break down very simply on my whiteboard here how Forex works, how we make money, and how you can get started in this Forex market right away. Hopefully avoid some of the pitfalls that, you know, are very easy to fall into as a beginner. And if not that, then, you know, you at least have a firm understanding if this is the market for you. So, real quick, you guys can follow me at Nemo Profits if you guys have any questions about, that's on everything, IG, Instagram, Twitter, Facebook, so on and so forth. If you guys have any questions about this video, all right? So, let's get into it. I have my handy dandy phone here just in case I ever get off track. So if you guys see me look that way, bear with me. All right, so basically, let's talk about Forex. So with Forex, we are trading currency. Very, very simple. We're trading currency. So I'm gonna put currency. Now, you guys have most likely heard of the stock market. You know, the stock market is always talked about. There's so many movies around it. You know, there's all kind of talk of the stock market, how it affects Americans. Even if you're not in America watching this video, most likely you've heard of the American stock market. Now, just like the stock market, the Forex market, currency, it fluctuates, okay? Fluctuates. I'm a trader, not a speller. Alright, so it fluctuates. Alright, now the thing about currency is it actually fluctuates like every second of the day. Okay, every single second of the day it's fluctuating in some way, shape, or form. And that's every single currency. That's euro, that's the AUD, that's the Japanese yen, that's the Great British pound. That's every single currency that you can think of. It's fluctuating at extremely volatile speeds all throughout the day, 24/7. And that's the difference, one of the bigger differences between the Forex market and the stock market, okay? Now, there's a saying in the stock market that maybe you've heard, and I'm going to be erasing some stuff here in just a second. I'll leave it up there for you guys to take notes. But there's a saying in the stock market that maybe you guys have heard, you know, just from a movie or anything. It's very popular. And the saying is, buy low, sell high. Now, who finished that before I could even finish saying it? It's very popular, okay? It's a saying that's very popular in the stock market, but it's also the exact same method that we use in the Forex market, okay? Since currency fluctuates at the, you know, the speeds that it does, we can do this. We can buy low and we can sell high, all right? Now, one example that I've given for years on, you know, basically buying low, selling high, so on and so forth, is let's say that we have $1.05. Okay, we have $1.05. Most people have had this amount. Okay, Now we have $1.05, but the one thing that we, especially if you're American, if you've ever had a dollar and a nickel in your pocket, the one thing that you're not realizing is that there are more decimal places after the 5. Okay? There's more decimal places after the 5 cents. Now, you're probably wondering, what are those decimal places? Well, I'm going to put some examples on what they could be. And this is just random, arbitrary numbers. Let's do like 05736. Okay? 05736. Now, this is basically how we make our money in the Forex market. Okay? This is how we make our money in the Forex market, that most people don't know how it works. Alright? Now, the thing about it is, with the numbers, no matter what number you're looking at, you need to read it from right to left. Most people have been taught, to read text from left to right. But with numbers, you read it from right to left. So with this arbitrary number that we have drawn up here, basically we're going to read this from right to left. We have the 6, which we like to call, or basically what it is 2 words you can call it. Is one, it's a pipette. I don't know if there's 2 P's in that, but it looks right. Pipette, or you could call it a micro pip. I'm going to just put micro. Alright? Now this micro pip, it fluctuates so fast that it's pretty much irrelevant. Alright? It fluctuates way too quickly to even pay attention to be completely honest. And that's just from, my professional point of view. I do not care about micro pips at all. They don't really directly, ruin or help my income at all. Alright? But the thing is that 6 that we have here can easily turn to 7. Let's just say that. It could easily turn to 1. It could turn to 0. It could turn to 9, 8, whatever. Alright? It fluctuates extremely fast. Now, the 7 and the 3 that we have here is what we really want to pay attention to. The 7 and the 3 that we have here is what we really want to pay attention to. Now, what the 7 and the 3 is called is a pip. Now, this is where things get interesting. Okay? Now, I think that we've got all this stuff up here taken care of. I'm going to erase all this. And let's break down what pips actually are. Okay? Now, a pip, I might have to switch to this side. A pip stands for percentage in point. Percentage in point. Alright? Now, the one thing that you have to understand compared to the stock market is everything in the Forex market is about percentages. Okay? And the reason why it's all about percentages, let me flip back to this side. The reason why it's all about percentages is because in reality, the Forex market is the largest market in the entire world. Alright? It's the largest market in the entire world with $4 to $6 trillion. Let me actually put a little, here we go. 4 to 6 trillion traded daily. Okay? That's a lot of cash. A lot of cash. 4 to 6 trillion. And it makes it the largest market in the entire world. Now, here's the thing. No matter how much money you think you have right now, chances are you can't keep up with just your money in the Forex market. Alright? You have to go through what is called a broker. Alright? Or a brokerage. Now, what this broker is going to do is they're going to give you what is called leverage. So you find a broker, like my broker, illuminatedmarkets.com, shameless plug. But let's say you find a broker, you throw in $1,000, all right? Well, in reality, that $1,000 is not enough to keep up in the Forex market. You actually need millions of dollars to keep up with the $4 to $6 trillion of volume. So what the broker is going to do is it's going to give you leverage. Now, what leverage is, simply put, is it's a loan. I'll put in parentheses, it's a loan. Very firm understanding of it. So what they'll do is that the broker, so like my broker, for example, when one of our overseas clients comes to us and is like, hey, I got this $1,000, I'm gonna throw it in real quick. I'm ready to trade. Well, what we'll say is okay, for every dollar that you put in, you're putting in 1,000. All right, Billy, all right? Thanks, Billy, for the 1,000. For every dollar that you put of that 1,000, we're gonna give you 200, okay? We're gonna give you $200 for every $1 that you put in. That's a lot of loan, you know? That's a lot of loan. Now, what that means is you have a 1 to 200 leverage, okay? A 1 to 200 leverage. Now, what this does, it gives you a decent amount of capital in order to trade in this market, because like I said, it's $4 to $6 trillion traded daily. So you can't keep up with your $1,000. But now that you have a loan, you actually have enough. Now, to go back to the percentage in point thing, and why the Forex market is built all around percentages, is because just because the broker is going to give you $200 for every $1 that you put in, does not mean that when you make your profit in the intra-market, you're going to make $20,000 off of one trade. It doesn't work like that. Because technically, I mean, you are, you know, depending on what trade you took. But since it's all percentages, what the broker is going to do when you see profit on your trades is they're going to scale it back at that leverage that you chose. Okay? They're going to scale the trade back at the profit that you chose. So your profit might be $200 off of $1,000. Okay? Depending on, you know, what type of trade you took, how long it went, so on and so forth. Okay, so your percentage is going to be based off of the amount of profit you made in the intramarket scaled back. All right, now I think we got a firm understanding of brokers and leverage. Let's erase this and get back to the percentage and point thing. All right, now the pip is how we make our money. If you master pips in the Forex market, you can master and become rich in this market. No doubt about it. If you master pips and you know that every time you look at a chart, or a high percentage of the time, 60, 70, 80, 90% of the time, you look at a trade and you say, you know what? I know that the pips are going to go up by 10. So plus 10. So what does that mean for this pip here, the 73? That means it's going to be 83. All right? That means it's going to be 83. Let's say, let's erase this. Let's say it goes up to 74. What does that mean? The market went up 1 pip. Let's say it goes down to 71. Erase this. 71. What does that mean? It went down 2 pips. If it goes down to 65, it went down 8 pips. Okay? You guys get the fact of the matter here. So, what you have to do is just master your pips. Now, in a second, I'm about to get into lot sizes. Okay, so lot sizes. Let's get into the 3 different types of categories. I should probably move this over. I'm gonna move over our little pip example and erase that so I have some room. Let's erase. Alright, so this is where it gets really interesting. So we got lot sizes. Now, what a lot size is basically the amount that you're actually placing on your trade, okay? The amount that you're actually placing on your trade. Now, in the stock market, they say, oh, I bought 500 shares. Well, in the Forex market, we say our lot size. Now, there are 3 different types of categories when it comes to lot size. One is there's a 0.01. I'm going to come over here. Hopefully you guys can still see this. So you're going to have a 0.01, which is a micro lot. You're going to have a 0.10, which is a mini lot. And then you're going to have a 1 or 1.00 or a dollar, is what we like to say, dollar lot, which is formerly known as a standard lot size. Okay? Now, this is where it gets really interesting when it comes to the pips and the lots. Now remember, we were saying that if this drops by 10 pips, that means if we do minus 10, that means this is at 63, this and everything else is the same. Okay? So it dropped 10 pips. Now, what you do to actually calculate your money in the Forex market is you're going to calculate your pips that you grab either on a buy or a sell position, we'll get into that in a second, times your lot size. Now, your lot size, when it comes to your micro, you're gambling 10 cents per pip. 10 cents. With mini lots, you're gambling $1 per pip. And then with standard lots, you're doing $10. And this is where it gets fun. $10 per pip. Now, if we took a trade, we took a sell at 1.0573, and we're expecting it to move 10 pips in the opposite direction, going short, going down. All right? 10 pips of drop. That brings it to this area of the market. If we have a standard lot at 10 pips, that's $100. $100 profit. $100 profit, just like that. Okay? If this moves 30 pips, or 40, it'd be easier to draw that. 40, that's $400. If you have a mini lot, it's $40. If you have a micro lot, it's $4. Let's say you have, instead of just one standard, you have 5. Whatever 5 times 40 is, or I'm sorry, 50 times 40, that's what you just made in profit. So the thing is like these pips that we are talking about here, they move fast, constantly, all throughout the day. And actually, the market moves anywhere from 100, hopefully you guys can see this, 100 to 300 pips per day, with around 1,000 per week. Okay? Around 1,000 pips per week. So, this is how you make your money. This is how me and my team are making our money in the Forex market over and over and over again. It's because we've mastered looking at a chart, understanding when and why and how many pips a market is going to move. And when I say a market, I mean any currency pair. Euro versus the USD. USD versus the yen. AUD, Australian dollar versus the USD, so on and so forth. It really doesn't matter what pair we're looking at. We can understand if the market's going to move and how much the market's going to move. And when we understand that, all it takes is for us to have the correct lot size. Okay? Now, this is a huge difference when it comes to stocks. Stocks, you know, their movement isn't as quick as ours, to my understanding. They're aiming for, you know, 8% per year, when we can have 8% in a day, because how quickly the market moves, 100 to 300 pips per day. So imagine if the market moves 100 pips and you have a standard lot. At $10 per pip, you just made $1,000 off of one day. Okay? If you have 10 standards, you just made $10,000 in one day. 100 standards. It just keeps going. All we have to do is change our lot size. Our strategy stays the same with the pips. As long as we know that we're going to get 10, 15, 20, no matter what your strategy is built around. I know traders that have a strategy built around 5 pips. And they're millionaires. Millionaires because all they have to change is the lot size. The strategy stays the same, but the lot size changes. The lot size changes. Okay? That's how you can be successful in this market. Now, the thing is though, some people may ask, well, what if the pips keep going down? Well, the thing is we can make money on both ends of the market. As long as we predict which way the market's going to move before it does, we can make our money. We can make money on buy positions, which is gambling that the market's going to go up. And we can make our money on sell positions, gambling that the market's going to go down. As long as we're correct and we have the proper lot size, we can make money over and over and over again. You can build a strategy on just going short, selling, or buying. You can build a strategy around both, like I have. I've built my strategy to grab anywhere from 10 to 80 pips. Okay? 10 to 80 pips. That's my bread and butter. As long as I know that every time I look at a chart, every time I take my buy or sell position, that the market's going to move at least 10 to 80 pips, I could be a millionaire Forex trader. Okay? And I actually average anywhere from 80 to 90% on my trades just doing this. Okay? Just doing this. All you have to do is master your strategy. If you master your strategy, you could be successful in this market. You can be a profitable Forex trader. Learn your strategy around, okay, I want to build my strategy around 15 pips every time I take a trade. If I do that, and if I build my account up, just changing my lot size over time, I can be a millionaire. If I know that if 80% of the time I take a trade, I'm going to get 15 pips, I could be a millionaire in no time. And actually it can happen in a year. If you're looking at it enough, if your strategy shows that amount of volume, then absolutely. If not, if it's a like once a week or twice a week type of thing, it might take you a couple of years. But the thing is you're going to be a successful Forex trader if you build your strategy around the pips. So I want to invite you all to work with me. you guys can head over to forexfortunefactory.com. That is my main course. You guys, if you guys are a little bit skeptical, you can go to forexfortunefactory.com/webinar. And that's a completely free training that you guys can learn from me personally. Go to forexfortunefactory.com/webinar. This is a 7-figure course created 2 7-figure earners and 3 dozen 6-figure earners at this current moment in time. Have no idea how else or how many others it's going to create, but right now it is a 7-figure course. If you guys are still skeptical, you can go to forexfortunefactory.com/webinar. So I appreciate you guys listening in. Hopefully you guys learned enough about the Forex market so that you guys can start to look in the right direction. You can understand if this market is for you or not. It's very exciting, it's very fast paced, it's not overnight. It's something that you have to learn, you have to work towards, but it is rewarding, it's exciting. You're going to be so fulfilled when you find what works for you. You have to build your strategy, master your strategy, and you can be a successful Forex trader in this market. So I appreciate you guys listening in. This was Nehemiah Douglas with Vision Trading Network, and I'll see you guys on the other side. Happy trading.